सेव किया था ना?
मैं सिर्फ इसलिए गया था क्योंकि उसने मुझे कॉल किया, that's it. But listen though.
Save it for someone else.
जिंदगी में सेव करना जरूरी है, मगर जब बात पैसों की हो सिर्फ सेविंग से काम नहीं चलेगा। इक्विटी म्यूचुअल फंड्स में इन्वेस्ट कीजिए और अपने सेविंग्स को आगे बढ़ने का मौका दीजिए।
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.
Over the last few episodes of Macrosutra, we've talked about quite a few important topics, GDP growth, and then the G20 meeting and what they would discuss. But now we come to another equally important topic, which is inflation. We have the most updated data now for August. And we also have data from the US apart from India. And within India, we have data from the states as well. So we're going to analyze that and what it says about prices. Are we finally going to see the price of essential commodities fall? That's what we're going to talk about in this episode of Macrosutra. I'm TCA Sharad Raghavan, and I'm Deputy Editor at ThePrint. And with us, we have Radhika Pandey, Associate Professor at NIPFP. Thank you so much, Radhika, for joining us.
Thank you, Sharad.
But now, before we start, I wanted to actually make an appeal to viewers, which is please do subscribe to ThePrint. It allows us to do the kind of ground reports, the kind of shows like this. And it also gets you several benefits. One of which is that you get exclusive invites to our webinars, where we have experts come in and tell you about the various news of the day. It allows you to write into us in our Your Turn section, where your opinion is written as an article. And of course, it allows you to get access to our newsletters, which come straight to your inbox from our editors. So please do subscribe. The link is in the description of the video. And let's get on with this discussion. So now, Radhika, we know that overall inflation in August has come down.
Right.
And you can tell us a little bit more about that. But has the main thing, which is food inflation, which has been hurting all of us,
Right.
has that come down?
Yes, so food inflation has also come down, and that is the reason why the overall headline inflation has come down.
I see.
Because we know that in the CPI basket, 45% of the CPI basket is accounted for by food and beverages.
Yes.
So if food inflation goes up, the overall headline CPI inflation also goes up. And so what we have seen in August is that the headline inflation has declined from 7.4% in July to 6.8% in August.
Right.
And this is mainly due to food inflation, which has come down from more than 11% in July to 9.9%. So it's still quite high.
But still a relief.
Still a relief. And we can talk about the dynamics of food inflation, what is rising, what has fallen. But overall, if we see it's mainly due to food inflation that we have seen this decline in CPI inflation, whereas the other components have been more or less stable. We don't see much of a movement there. It's mainly the food inflation which went up, and now we are seeing some signs of deceleration or moderation in food inflation.
Right. So now if I go to our grocery store and I try to buy, for our next few meals,
Right.
what is likely to have become cheaper, more expensive, and what is the outlook for them over the next few months?
Yes. So within food inflation, what has caused the decline is the vegetable prices. That is what is the main pain point, which was there in July and also in June. And especially we've heard about tomato. We've done an episode on tomato prices. So the main point of relief is that tomato prices have started to come down, and they are still declining, and other vegetable prices also. So it's the vegetable prices that have come down, though they are still high, but they have declined substantially from July to August. So within food inflation, it is the vegetable prices that have come down, whereas cereals inflation is still high, it is elevated, but out of all the components, the main cause of concern is the pulses prices. Whereas pulses prices have increased. Even if we look at the daily prices, which comes from the Department of Consumer Affairs, we see that some of the dals, like especially tur dal and moong dal, we have seen a sharp spike in prices. And one of the main reason is that the sowing of pulses has been lower this time till now. So what we get a very important data is the progress of sowing that has happened in this year as compared to corresponding period last year. We see that the sowing of pulses has been 9% lower this time.
Oh, no.
So this time, so it is the pulses prices that have that will now impart an upward pressure on food inflation. Cereals again will depend on outlook. If we talk about what happens to the rainfall, because we have seen August as the most deficient rainfall month, and in September, if rainfalls are revived and we see a more even distribution of rainfall, then we can see prices of cereals also cooling. But right now that impact of El Nino still hovers, not only on the existing standing kharif crops, but also on the sowing of rabi crop, which is expected. So if the rains get delayed, that will have an impact on the yield of kharif and also on the rabi crop.
Right. So actually related to that, there is an audience question. Now, again, if you want me to name you when you are asking questions, then you have to leave a name. You can't leave it anonymous. But right now we have an anonymous question. It's to do with wheat prices. And they say, how do you see the impact on food grain prices in India, considering El Nino and the Black Sea grain deal that Russia pulled out of? And will that affect prices in the coming few months?
Yes. So price trajectory of food grains, of cereal is uncertain. And again, as I said, it will depend on the path of rainfall. What will be the intensity of the impact of El Nino going forward? So it will get clearer by September end. If we get normal rainfall as the IMD has predicted, then we should see cooling of cereal prices. Otherwise, the government would have to intervene more with its supply side intervention measures. We have seen over the last couple of months, the government has intervened by imposing bans on exports, importing and reducing import duties. So in whatever way to enhance the domestic supply. So all these things will have an impact on cereal prices, and the Black Sea Grain Initiative will have an impact on international cereal prices, which again will get reflected in our prices. But in terms of rice, as I said earlier also, we are the major exporters of rice. So if India imposes limits, that will have a impact on international prices of rice, and we've already seen the prices of rice rising internationally. So all these factors, they are uncertain. They need to be watched out for in the coming months, but position will get more clearer by September end. But as of now, if we just look at the buffer stock, we do have adequate buffer stock for wheat and rice. So that is not a very alarming situation, but going forward, we need to replenish the stocks with production that will depend on the yield based on the rainfall.
Right. And now the other big item that affects households is fuel.
Right.
How is fuel inflation been? And again, what is the outlook?
Yes. Till now, fuel inflation, which is measured by the component fuel and light within the CPI basket, it has remained benign. Though in August, we saw some upward pressure from 3.7, it rose to 4.1% year-on-year change. But going forward, there could be some headwinds to this number because of the extension of production cuts by Russia and Saudi Arabia. These are the two key OPEC plus countries, and in order to stabilize and to give a lift to international crude oil prices, they have announced production cuts. They have announced, and what they were doing was that they were extending those monthly, those production cuts every month. But now at one go, they have said that those production cuts will remain valid till the end of 2023, which means that Saudi Arabia will cut production by 1 million barrel per day. And similarly, Russia will also do. So both of them will cut production, and that will impact supply, which will get reflected in our CPI fuel inflation going forward.
Right, because we also import about 80% of our oil requirement.
The component of discounted oil import has now fallen substantially. So this will have an impact on CPI fuel inflation, because as of today, as we are talking, the Brent crude oil price has surged to $92 per barrel.
Ouch.
Till now, it was less than 80 till a couple of days back, and now we have seen a sharp surge. So if this is, and interestingly, this has had an impact on the US inflation also that we can talk about.
Yeah.
So globally, we are seeing new headwinds developing and complicating the task of central banks because of new pressures on inflation.
That does not sound like good news. So now there are also the CPI measures inflation in a lot of other household items as well, like stuff that you and I go and buy, things like household products, like, you know, consumer products and hair care products and all of that. So how have prices been moving there?
So there, encouragingly, prices have been benign, constant. If we just take one summary statistic, that will be one measure, that will be core inflation. And core inflation is after stripping the impact of food and fuel that we talked about. The core inflation is less than 5%, and it's fallen from 4.9 to 4.8% in August. And if we look at the various subcomponents like education, health, household products, as you mentioned, the various kind of services that we use, there the services price inflation is constant and it has been less than 5%. So normally what we talk about is the transmission of fuel inflation or food inflation to core inflation. That has not yet happened, encouragingly. So that's a welcome news. And that is the reason why RBI has been abstaining from raising rates, because core inflation is still, it hasn't reached any alarming level. It's actually declining.
Okay, that's actually good news. And the thing is that food and fuel inflation, as we've discussed, an interest rate hike is unlikely to directly impact them.
Exactly. So there more of supply side measures are needed, which the government is taking and will continue to take. Right.
So now, as I mentioned in the introduction, there was also data on the states and how inflation has been. Of course, we know, and we've talked about this before, that there is a lot of interstate variation and intrastate within, you know, urban and rural. There is a lot of variation. But which states right now are seeing the highest inflation and the lowest inflation?
So we know that all India inflation is 6.8%. So let's look at some of the states that are experiencing more than 8% inflation. So the state that has experienced the highest inflation is Rajasthan. It continues to be. Last month also, Rajasthan featured as the state having the highest inflation level. This time also, though inflation has declined in Rajasthan also in tandem with all India level marginal decline, but it is still higher. It's still higher than the all India level. Some of the other states are Telangana, Jharkhand, Odisha and Haryana. So these are the top 5 states whose inflation level is above 8% or nearing 8%. So these are the top 5 states having high inflation. Delhi has the lowest inflation of 3.01%. So Delhi is one of the states having the lowest inflation. We can talk about so in Rajasthan, so in most of the states, the key driver of inflation at the all India level is food inflation. But in Rajasthan, very interesting point is that the fuel inflation is 30%. So that is 30%. 30%. So 30, yes. Wow. So all India level inflation is 4% fuel inflation, whereas in Rajasthan it is 30%. So, and there also, if we see rural and urban, there will again be a big variation. So one of the reason is that the fuel rates are very high in Rajasthan. The VAT is very high in Rajasthan. So that also gets reflected in the prices. But other than fuel inflation, food inflation is very high, and spices within food, spices inflation, which is a very small component, but its inflation is almost touching 30%.
Ouch. Wow. So that is why Rajasthan is seeing high inflation.
Yes.
But is it also the same reason why Delhi is seeing low inflation, fuel inflation?
Yes. So in other states, we have seen there is a wide variation, but in Delhi, the fuel inflation is not that high. That is one reason. And other core inflation measures like miscellaneous, food and clothing, that also we do not see very high inflation measures. So that is the reason for Delhi. Whereas one very interesting thing is in Haryana, as you mentioned about intra-state variation.
Yes.
So in Haryana, which is another state which has very high inflation, there is a wide difference between rural and urban inflation. So the rural inflation is 3% more than the urban inflation.
Wow.
So 9.7% is the rural inflation and urban inflation is 6.7%.
Okay.
So there are states where urban inflation is more than rural, and there are states where rural is more than urban, but the difference is not that much. But Haryana features as one state where there is a wide magnitude of difference between rural and urban inflation.
What could possibly be driving that?
So one of the reason is maybe there are infrastructural bottlenecks. That could be one of the reason. Mainly food inflation. So we have seen that there is a wide discrepancy between food inflation, wide variation in food inflation between rural and urban areas.
I see. So, I mean, the one main upshot from this is that Rajasthan is going for elections.
Yes.
And it has the highest inflation in the country. That's something people in Rajasthan will be taking note of.
Right.
Now, as we mentioned, the US also came out with its inflation data. How has that been, the latest data that's come out? And also, is it likely to affect us in any way?
Yes. So again, US inflation, till now, US inflation was declining. Now, when US releases its inflation number, it comes up with two kinds of numbers. One is year on year, which is how much inflation in August of this year is as compared to August of last year.
Right.
But they also come up with month on month inflation, which is what they look at more closely. Month on month is August, how much inflation has risen over July after adjusting for seasonal fluctuations. So they do a seasonal adjustment and then they release a month on month number. And that is something which is very interesting because what was happening was over the last 3 months, CPI inflation in US was rising by 0.2%. Okay, from May to June, from June to July, it rose by 0.2%. But now from July to August, it rose by 0.6%. Okay, so year on year, you will not see that peculiarity in data or that noteworthy impact or element. But in month on month, seasonal adjustment after adjusting for seasonality, and that is released officially. It's released by the Bureau of Labor Statistics in the US. So there we see that the month on month inflation, the CPI inflation has risen by 0.6%. Till now it was just rising by 0.2 or 0.1%, and therefore people were happy that now Fed will abstain from raising rates, and maybe in early 2024 the US Federal Reserve will cut rates. But this time the extent of increase has risen as compared to the previous month, and the main reason is gas prices. Gasoline prices.
I see.
So they measure something called gasoline price index.
So again, fuel basically.
Fuel, yeah, exactly. Fuel. So gasoline price index has risen by 10.5%.
Wow.
Not year on year, month on month. So that is the reason why it's getting reflected in the headline inflation of 0.6%.
I see.
And that is again due to, we've seen the production cuts announced by Russia and Saudi Arabia. And also there has been a very devastating flood in Libya, which has caused this production disruption, and therefore supply has been hampered, and crude oil impact is being measured, and it's been also seen in the gasoline prices. So it's mainly the gasoline prices, because other prices are again constant. Not too much. Food prices are okay, they are moderate, but it is because of the gasoline prices, which is again due to the global headwinds on crude oil, that we are seeing the impact on inflation. And it will be interesting to see, because next week is the Federal Reserve interest rate setting meeting. They will decide, at least their commentary will be interesting, because they might not increase, but what is their outlook on inflation will be very interesting because of this new set of development.
Right. And I'm guessing that the impact on India won't be direct, but the thing that is causing higher inflation there is likely to also cause higher inflation here. That is the connection.
That is the connection. And what happens is the impact will be through financial markets, because what happens is when there is high inflation in the US, their dollar index rises.
Right.
Their bond yields rise. The yields on their US Treasury bond rises because they have to give a higher yield in order to attract investors to invest.
Yeah.
So in that case, what happens is that there is more outflow of financial outflow of investments from Indian markets to the US, which is what we see every time whenever the treasury yields rise for whatever reason. That was the reason that happened in August also, because of the Fitch downgrade that we saw, and the US treasury yields rose. FPIs, foreign portfolio investors, we saw moderate set of buying, not very attractive buying that we had seen in June and July. So it will have an impact on financial market. It will have an impact on exchange rate, because rupee will depreciate if there is an exodus of foreign investments from India into the US. So all these things need to be seen. And what is the difference in the interest rate between the US and India? That will measure, that will shape the trajectory of capital flows.
Of course. Now, Aditya has quite an interesting question, in that we've talked about before, and we know that inflation in India is affected by both global factors and domestic factors. Global factors could be fuel prices, domestic factors could be things like food prices and our monsoon and things like that. So what he asks is, on balance, what proportion of impact do these two things have on inflation in India? Do they have equal impact? Is it 60-40, 70-30, like that?
It's hard to discern the precise impact or percentage, but what happens is that different factors will impact different categories of inflation. For example, when there is a global crude oil price hike, it will have an impact on our fuel prices, the fuel and light component.
Right.
Whereas if there is El Nino kind of an impact, that will impact our food prices, which is a domestic disruption. So different kinds of disruptions will have an impact on different categories of CPI, and the impact is not dynamic. It keeps on changing. Sometimes it's more driven by internal factors. Sometimes it's more driven by external factors. For example, during COVID, we saw it was entirely due to the lockdown and related supply side disruption. Also due to global crude oil prices first falling and then rising. Right. So every time the trigger point is different, and it will have an impact. The transmission mechanism may be different. So it is very difficult to pin a particular percentage, because it's a very dynamic impact playing out.
Right. And now Aditya has another question. He says that, do you think that when the Q2 GDP numbers come, we'd be able to see the impact of these rising prices, of inflation on those numbers, and that the GDP number might not actually meet the target? Is that likely to be the impact?
So we've already talked about when we discussed the Q1 GDP numbers, where we saw that the agricultural GDP came in lower than the previous quarter, the Jan to March quarter. And there also we saw some impact of El Nino and uneven rainfall. So that impact will be more pronounced in the Q2. And that was the concern that was raised even that time as well.
Right.
Because of lower yields, higher prices, it will have an impact on agriculture. That is one. And secondly, if the prices are higher, it will have an impact on consumption. It will have an impact on the variable which is called the household consumption, private final consumption expenditure. Right. So depending on how the policy interventions are taken, the impact will be there. But yes, definitely there will be some elements or categories of GDP would be impacted due to all these higher prices that we are seeing.
Right. And now finally, we have a question from an anonymous asker, which is the government recently cut the LPG price by 200 rupees. Do you see this having an impact on inflation in the coming months?
Yes, it will have an impact. So it was announced in August end, 30th of August. So we'll see its pronounced impact we will see in the September inflation numbers. Right. And according to various estimates and calculations, the impact will be somewhere between 30 to 40 basis points. So that will be the impact on the LPG price cut, though it won't be a very measurable, very significant impact, because on the one side that will lead to a downward pressure on inflation. On the other side, global crude oil prices will impart an upward bias on prices. So we need to see net what happens. But if we just isolate and analyze the impact of LPG price cuts, yes, it will have an impact of around 30 to 40 basis points on the overall CPI inflation.
I see. So there you go. I mean, the inflation picture is still pretty mixed. On food inflation, things are looking somewhat better. Veggie prices certainly have gone down, so you can actually quite comfortably go to the mandi. And the outlook is that things like tomato, the prices are still falling. So that's good news. But food grain prices are still under pressure. So, that might still be expensive when you go to buy them. There are other aspects, your household items, things like education, healthcare. Inflation in that has been easing, which is great news. But now fuel inflation is, and it could likely play a spoiler in all of this, because Saudi Arabia, Russia have extended their production cuts till the end of the year. That's likely to impact supply. And when supply gets impacted, a country like India, which imports 80% of our oil, is obviously going to get impacted. Our prices are going to go up. So that might impact inflation in the coming months. So there's this up and down effect that's happening. But so far, at least to do with food, the news is, at least it's better than it was in the last few months when it was very, very painfully high. And on that note, thank you so much for watching.